who's come to our studio. I always get excited near Christmas when Santa Claus comes and next time when Bala comes. So Santa Claus is known for giving. In stock markets, you will are known for giving tips. So now that I've called you Santa Claus, give our viewers some money-making ideas. Apart from SIPs.
No,
and selling your mutual funds.
I can only say that everything will end well. Whatever the tariff, the whole discussion started. I was just jokingly telling one of my colleagues some time back, tariff for tariff, which is mellowing down, reducing the impact of initial.
We'll keep in the conversation some other time, Bala.
Discussion. No, I was just jokingly I was telling. So that's the way I think will evolve. I think the way I see is, I think things will settle down. People also understood what the kind of impact would come, and everyone has to revisit their business model. And at least US has opened up the whole thinking process across the world, and now having understood, now coming to the negotiation table, and US also have now understood the way they have been doing a relaxation the last 2-3 days, like making exemption for semiconductors and electronic goods and so on and so forth. These are something about realization that now they are getting to understand more deeply in terms of where they have to dilute, where they have to continue, and how the economy has to be adjusted into the new model and so on and so forth. So the new world initially was looking extremely uncertain, but I cannot say that uncertainty is still not there. Uncertainty is there, but I think the impact probably could be a bit diluted. And second, from India point of view, probably is a great opportunity from India point of view. I think the way the government has been handling quietly without making much noise, and looking at more deeply in terms of how Indian model can get adjusted, especially from the trade point of view. My belief is it might turn out to be a big beneficiary. Rather, India could become the big beneficiary of the whole stuff. That's my overall gut feeling. Since you mentioned about Santa Claus, I thought let me give more of a spiritual and philosophical answer to start with.
But how much of the pain is behind us and already in the price? Because for India, there was already a churn before all this tariff talk came about, and we've already had quite a bit of fall from those, October lows up until Feb.
So I think it's there in the. I think from India point of view, one good thing that has happened, whatever the excess got created, which is created by our own the participations in the market by individuals, retails, excessive speculation that happened, and the prices were going beyond the intrinsic valuations that one would apply for those companies. That got corrected before, and thanks to the regulatory changes that happened, thanks to Reserve Bank of India, thanks to SEBI, I started looking at more closely just about a year back.
Yeah.
So we started following about a year back. Therefore, during the tariff time, I would probably assume most of those uncertainties were there, except tariff related issues where the global uncertainty sets in. But I think the way I think if you look at the valuations, I think we used to trade about 20 to 23 times P multiples, and that has now dropped about 19 times P multiples, maybe 8.5, 19 times P multiples. And then earnings are also coming down, even from analyst expectation point of view. The earnings coming down is also already been predicted. It's not that people are still bullish on earnings and then expecting companies to outperform the analyst expectations. That's also not there. On the contrary, most of the downgrades happen from analyst point of view. In all probability, the company either will start meeting the analyst expectations or marginally outperform the analyst expectation. That might also begin. Therefore, my own belief is it's already there in the price. And the last 2-3 months, even government expenditure, especially towards infrastructure building, already started seeing somewhat of gaining a momentum, and the GST tax collections continues to remain somewhat robust. I think from look at it from multiple angles, I think it must be there in the price, I would say. And on top of it, Reserve Bank of India and moving towards the easing of monetary policy, and despite knowing the fact that international volatility, in the historic standard, if you take, whenever currency become volatile in global market, I think Indian central banker generally don't touch the interest rates. And this is the first time I think they are touching the interest rates, knowing very well international uncertainties remains. But as far as we are concerned, we have to focus on our growth and inclusive growth that I think India has been talking about. That's something the Reserve Bank of India is also supporting them by way of cutting interest rates, taking steps towards improving the liquidity, In fact, first time ever in the monetary policy regime, since the time the new governor took charge, he has released close to about 5 lakh crore in the banking system, which is actually historical liquidity has been pumped in, which has never happened in the past, which essentially means understanding the relative impact that could have. Therefore, proactive measures which has to come from a regulator is something is being seen. And this is already seeing the impact of that by transmission of rates at this point of time around deposit rates coming down, eventually lead to a transmission of interest rates even for the borrowers as well. So all those things, my view is good moving parts, which ultimately start delivering the right impact as we move forward.
So, Mr. Bala, let's talk about SIPs, because how you guys promote is a subse important plan. So, help us understand that in such market turmoil, how our SIP investors have proved to be winners, and what should be the strategy now, since we see that the inflows are seen to be hitting new lows. There are some of the SIPs that people are just stopping at this point in time. But what's been your reading and what will be your advice?
So, the reason we put the tag word of subse important plan, it is to just reinforce that how important SIP in the life of people, life of savers, and it is market agnostic, it is return agnostic, it is more goal driven, purpose driven. Therefore, SIP is something should be part of the everyone's portfolio at all point of times, and you should not never timing your SIP investment. That's the message that you are giving. But having said that, the last few quarters, we have been seeing a rise in SIP book, has been quite continuously, has been rising, and we have touched the peak of about 20,000 crores. We must also appreciate the fact that a lot of new investors have been coming into the SIP way of investing in the mutual fund, and that something has become real. But having said that, the last 1 year over has come, they would probably would not have enough experience. Therefore, generally we have always seen the trend historically. Whenever the market turns volatile and people have come on the basis of certain assumptions that I'll make money on a continuous basis, and those if those expectations are not being met, then naturally you will see the outflows happens. But that is not something significant. I think as a proportion of the inflows versus outflows, if we take, the large component of the SIP registration still comes on the gross number level. The whatever will see the cancellation, which is probably I call it about 30-40% generally can get cancelled. We have equal number of people also coming on the other side. So therefore, we have to look at the gross number, which is generally the trend of investors. The gross numbers registrations continues to be on the rise. Therefore, SIP cancellation is actually the function of the market, but it also doesn't take much time to come back. Because SIP is something people have now understood the power of saving. In fact, those who have remained invested through the entire period of volatility, they would have got the significant benefit of the SIP way of investing in the mutual fund space.
But one way of looking at this SIP number is the number of new unit holders or number of new applications. One way is that look at the total kitty. And third is looking at the number of gross cancellations. So from a benchmarking standpoint, last 3 months markets were bad. A lot of 2-3 year SIPs have gone negative. What is the right way of looking at SIPs? The net number, the gross cancellations, new additions?
I think the way I always look at Nikunj is the best way to measure the level of participation is the gross number, which is the gross number about 26,000 crores is the number which comes in. Net inflows after say cancellation etc. would be in the range of about 15 to 18,000 crores. Then of course industry doesn't disclose the net number because we always look at the gross number. The gross volume is actually represents level of interest that come from investors. It also represents the level of understanding that people have got in building the SIP from longer term point of view. So that's why I always look at it. Second, we have to look at how many number of new investors also keeps coming in. I think you'll have a new participants. Today we have about 5.2 crores unique customer base. 5.29 crores roughly. Unique customers, single PAN number.
These are not duplicates.
These are not duplicates.
So India today has 5 lakh SIP investors.
No, 5.2 crores. 5.2
crores
investors.
Sorry, 5.2 crore investors.
And 50% of the investors are in SIP.
Okay.
Roughly about half of it would have come in the form of SIP.
No, but if somebody has 3 SIPs, won't that be double counting?
It will be single PAN.
Will be single.
Now Bala has got 25 folios. I have 45 folios because the skin in the game.
You have 45 folios.
Because I have to invest in all the schemes as per the regulation.
Then we should open ETF only.
As per the regulations, as a CEO of the mutual fund, I am supposed to invest under the skin in the game formula.
Wow.
I am supposed to know all the
How
schemes.
do you even keep track?
But that 45
So do you
folios
have an investment advisor who tracks it for you?
I do it myself. Of course, I invest 100% of my money in my own mutual fund.
Okay.
So it's never an issue for me.
Okay.
And we have a good digital tracker for investors to track their portfolios. I don't look at the portfolios. I only look at the total investment that I have made. But having said that, the 45 folios will be counted as one, as a single PAN number. We have about 5.29 or 5.3 crores unique customers that we have. But the same number, just about 3 years back, it was just about 2 crores.
Yeah, it's
It's been
doubled.
growing.
It's doubled.
I think what is most important for Indian mutual fund industry is that's why I keep saying all the time that I think the landscape completely got changed from a server's point of view to invest in mutual funds now by way of SIP now become the reality. Therefore,
Well,
the number
so-
is the gross number keeps rising, new investor keeps coming in,
Fair point.
and every
It's
fall
still
in the
such
market.
a small number, I would say.
Which one?
I'm saying still it's a small
It's a small number,
It's
yeah.
still
Yeah,
very
one-
underpenetrated.
1.4 billion is India's population. You take
Yeah.
out the extreme ends, which is 20% on the top, 20% on the bottom. You still have like a 90 crore Indians who potentially can be
scope.
directly, indirectly come into it. You
Yeah,
divide that by, or let's look at number of households. 40 crore households.
Yeah.
You take 20% out,
Correct.
and you knock off 10% duplication. That's 30%. So 40 into 30% is 28 crore. It can still reach up to about 20, 25 crore households.
Correct.
So Bala, can I say that, and this is a number we take a lot of pride in, all of us take a lot of pride in, that in this last 3 months when the markets were in a tizzy, the SIP collections were robust. Barring this number which may mathematically be at a 4-month low, that's maths. But in general, the number now comfortably seems to be north of 20,000 on a monthly basis at gross level.
Yes.
So the Indian SIP investor has not panicked in this turmoil.
Absolutely no. Absolutely. Even the lump sum investors would have panicked not because of not being comfortable with the mutual fund.
In last 3 months, have you got more outflows or inflows across categories?
There's inflows.
All categories,
Yeah,
even
all
in small
categories.
and mid cap?
We have seen inflows coming in large cap, flexi cap, multi-asset allocation fund. We also seen inflows coming in the hybrid funds. Hybrid funds have been getting a lot of inflows. Even fixed income funds. Some of the fixed income funds, people on the base of expectation of a rate cut, and a lot of people have started coming into the fixed income funds. My own belief is as we move forward, even the liquid fund will start getting flows, given the fact that the rate in savings bank account rates are being now cut to about 2.5 to 3%, and liquid funds would generate about 6 to 7% on an average, roughly. Because that's investing in about 90 days money market instruments. I'll also see participation coming even in the liquid fund as part of their parking of their money in the mutual funds. Therefore, if you look at in the equity space, we are seeing across all categories, including small and mid cap, though the noise levels on small and mid cap could be more not favorable kind of thing, not negative I would say, not favorable, but still flows in small and mid cap also start coming in, given the fact that one, asset allocation plays a role, and SIPs come for a longer term, it's for a perpetual, and that's something people have understood. And people also understood conservative investors can actually choose the hybrid funds. Hybrid fund also has seen decent amount of growth. I think it's coming across the category, I would say.
Okay. Bala, so good to have you in the studios. And yes, you did come with gifts. We did understand a lot more about how to go about SIPs right now. And yeah.
If you like this video, then like, share and subscribe to ET Now.